All right. Welcome, everybody. How are we doing? Javier, Born. Everybody's in the house ready. We do have Nick Shaheen, lead trader from the Options Inner Circle chat room. A lot of you guys already know him. What's up, Bernard, Brian, Bryson? Good to see you here, brother. Bryson just joined here last week. Joey, Mac, Ryan, Son, Trevor, Travis. Folks, we have a good session here planned for today. Make sure that you're paying attention. We are going to bring on here Nick Shaheen here shortly, where everybody's going to be able to go over all of this, folks. So in the chat, go ahead and give me a 1 if this is your first time in the chat room in this session. First time looking at this session, give me a 2 in the chat if you've already been here before. Really quick, we're going to go over a couple of things here, folks. Let me just pull this up. I'm going to show you here the session. A little bit of what's going on, okay? So my name's Rodrigo. A couple shout outs there. Tam, good to see you. JJ. So in the chat, let me know when we're good to go. Basically today, we will be going over trade ideas, options educations, basically the strategy that's being used in the live room, options education, setups for equities, options, crypto, buys and sells, charts, market discussions, Fed. We're going to talk about the Fed rates, what's happening. And by the end of the session, you will have a much better understanding, not just of the current market environment, but also how to take advantage of it and trade along with it if you do want to take it to the next level with Nick's live Inner Circle chat room. So I believe we do have Nick in the back here. So let's go ahead and bring on Mr. Nick Shaheen. All right, let me go bring him in. I believe he's there in the back. And what you're seeing, folks, is the live room. Basically, Nick just got off a meeting there. He does it every Sunday. He's in the chat room pretty much 9 to 5. What's going on, Nick?
Another working Sunday.
Good to see you, man.
Good to see you. Good to see you. Thank you for taking time on your Sunday to be here and to throw this shindig for the folks. I see a lot of ones. Was that people that are new?
These are people that are basically here for the first time in this session. Okay. So for those people that are for the first time, Nick, give us a brief introduction of what everything, all the work that you've been doing with options and Benzinga before we carry on here.
Okay, so I'm going to take the screen so I can speak to it a little bit, if you don't mind.
Yep, no worries, man.
Okay, I think this one would do well. All right, so you're looking at me trying to fiddle around with charts. So like Hot Rod here told us that I just came from a meeting with my people that are already members, and hopefully you will become members after today, at least get you interested in that. So what happens on Sunday is I basically am a slave to you guys. I do your homework for you. So on Friday, I send out a note with a form saying, give me your tickers that you would like us to review over the weekend. So I'll spend my Saturday evening and afternoon doing that. And then on Sunday, I'll meet with you for about 2 hours, 2.5 hours, however long it takes to tabulate those results. And I end up with 3 videos. Today's was 126. The one before it was more. The highest recently was 179. So it all depends. So last week was difficult. Some people maybe felt like they need to take the day off, but regardless, I make myself available to do your homework. So you're basically getting a free webinar every Sunday. And in it, we discuss other things. Like today, there were a couple of questions about specific things of what to do with Tesla, for example. One person has 600 shares and she was asking, how can she put them to work, which is selling covered calls. So we have an answer for that. And another person said, how can I replace stock? So, and Tesla was one. There were a couple more stocks. Twilio was one. I can't remember the other two. How to protect their downside by taking some money off the table, but staying long that stock. It's called the stock replacement strategy. Those are just 2 questions that are still in my head. So Sunday is homework time, me delivering the homework that you wanted us to do. So then you go into the week armed with knowledge and lines. And the spreadsheet will be available to all the members, and it's clickable. They click on a chart, the chart comes up, and then we talk about it. And then I post the videos, of course, in my chat room, which is not the live room. So let's get something clear. I have a chat room that's been there for probably 11 years. This is one of them. This is it. Now, this is a remake of it, but this is the concept. It's been available for a long time. In addition, recently, last year, I added something called the live room, which is completely different ballgame. In the live room, I have my mic on all day, every day, 9 hours and change. I log them. So this is where I'm tracking the action for you, 1 minute at a time, 5 minutes at a time, 15 seconds at a time, trying to beat the market, trying to find opportunities short term, in and out, in and out. So this is the only way to actively trade the price action. Good or bad, there's opportunities. Like Friday was pretty painful, right? But we had the opportunity to trade it actively all day. So we set it up and we say, this is an entry, this is a bull trap, this is a bear trap. And let's see here. If we lose this support, the target would have been 362.4. They went well below it. They ended up at 362.8. So we do well tracking the price action. Not just me. We have 300 people in there, probably 24 super strong technicians themselves. So everybody's contributing. So we have basically 600 sets of eyeballs out there looking at the action, trying to make us some profits short term. I personally cannot trade this fast. So I resort to doing iron condors, trying to make money off of the day's action based on a range. So I don't have to be in and out. I take a risk here and there and try to get 20 to 25% a day from the SPX, for example. It could be done with the SPY, but every other day, not every day. Other tickers as well. So the SPX specifically, it expires every day. So Sundays, super busy, me doing homework for you. And Sunday, again, at night. So when the futures open this evening, I wait a couple of hours and then I do another video that's a strategic market update for the week. It's about 8 minutes long. Like this week, I will have very important things to say because it's a potentially emotional day. The only thing that's changing these days are the emotions. The facts have not changed in weeks. Nothing has changed. So the basic summary this week would be look out for emotions. And this will come from the PPI, CPI, Fed minutes on Wednesday. And earnings reports kick off towards the end of the week, specifically with banks, and they don't have the best of responses usually. So emotionally, we are vulnerable at a place where we need to recover the neckline again. So that's an important video. It comes out every Sunday. Now then Monday, you have the choice of joining me live if you have the time. A lot of people don't. So hundreds and hundreds stay inside the chat room if they have questions. So they go in here, Nick, what did you say? I'm looking at this. What do you think? Direct message or in the main room, and they help each other. If somebody asks a question and I'm not in there, somebody jumps in and answers it. Like, these are not my charts. This is, maybe, that looks like my, it's not. It looks like my chart. Somebody copies me very well. So this isn't either. So everybody's contributing. So I contribute here. Nobody can contribute other than me in here. With the morning note, the morning note will have clickable links for the indices and comments as to what to look for. So complete coverage from before the bell rings on Monday until Sunday night. You're completely covered. If you want to actively trade, I'm with you every minute of the day the market's open. I don't think anybody else will give you that. There are other mavens and experts out there. I dare you to find somebody that spends as much time with you as I'm doing these days. And I love it. I'm not complaining. I absolutely love it. The people in the room are insanely fun and they push back and they swing trade. Opportunities are incredibly strong. We have people that post their trades. 1, 2 are super fast. 1 swing trading almost never misses. So if you follow his, you're making money. Another one who likes to trade like I love to trade, which is selling puts into fear at the risk of getting assigned shares. Not everybody can do that, but he does that. Actually, several of them do that. That's the easiest way to make money. So it's all, any style is covered. I have futures traders only. I have a mix of futures and options. I have options traders on futures, which you didn't know existed, yes, and they don't have PDT rules. So if you have a smaller account, that's the way to go. I have FX traders, not a lot, but we can cover their charts. So whatever your style, whatever your goal, you will fit right in. If you're too new and you jump into the live room, you will feel overwhelmed a little bit because there's a lot going on. But within a week, I would say you would get the idea. And I encourage you to ask a million questions. You can ask them in private as well in the live room. So I'm busy, to say the least, but with a bunch of people like you. So it's a lot of fun. And nobody in my family and friends can talk the language I talk. So for me, I'm hanging out with friends who talk the same language or want to. So it's a lot of fun. So this is my day. So today I'm half done because I have this. And then later tonight, I have the video. And in between, I have a couple of other things I need to do and walk the dog maybe a couple of times. Yesterday's gym was exhausting. I fight for a sport and I fought too many young people yesterday. So I'm a little jarred today. The age says, you're not that young, son. Stop fighting these 20-year-olds, but I still want to do it. All right. So today is going to be fun. I'm going to answer some questions you have. I'm going to tell you how to trade this this market action safely and what not to do and what to do. And if you want, Hot Rod, how about we start by like, here are the indices and here's what to look out for next week, kind of like a general terms, so that we're all on the same page. Would that be okay?
Yeah, some of the folks were actually asking to see actually how you managed last week's volatility in the live room, because that's where you're doing all your trades and stuff, but also to throw them a little lesson of how you are able to do this with all these, what is it, 350 people? Something like that.
In the live room, between 280 and 320, 330, depends on the event. So on Fed day, we almost had 400. Everybody is interested to see what happens on Fed day. But here's how we navigate. I start every day by saying the easiest thing to say. So let me say it to you. If you're out here trying to trade, here's the easiest thing to say. The easiest thing to say is that the sellers are in charge, correct? If that is the case, and it is the case, I should assume, whether it comes true or not, I should safely assume that the rallies will be sold, because that's what's happening. So if we get a rally this week, what are we going to do? We're going to sell it. What does that mean? So the rules of engagement for me would be to, if I take longs and they work, or shorts, if I take bullish or bearish positions short term and they work, I book profits much faster than normal. If I take longs, like Friday was a bad day. If I had longs and Monday we open up and that rally fixes my problem or makes them a lot smaller, I close those problem trades. And on the rallies, if I need protection, I add protection. Why do I need protection? So I'm reading the technicals out there. I have my opinion. We need to hold this June low. This is the S&P. Doesn't matter. The market is all looking the same. So this level we're fighting for must hold. Otherwise, we're going to go to like summer of 2020 levels, which weren't a disaster, but they weren't great. So there's a lot more downside to go. Let's put it into perspective. If the S&P, SPX, does not recover the neckline, we have about 1,100 points worth of downside. Yes. So we will go well below the 3,000 level. I hope we can avert it, and we can avert it, but there needs to be some changes. And the changes are not in the facts, because the facts have not changed much. The fact is, the only threat to the economy right now, there's only one threat. Can anybody name it? Powell. That's it. He is the only threat. His words are the only threat to the economy. If Powell says, I'm done, the market goes to new highs. I have no doubt in my mind. The market will rally hard, dip, rally hard, and choke all the shorts above here and make a new high within weeks. But that's not going to happen. Why? Because the other fact that is not changing is that the economy is still too strong. There's no tangible metric that says the economy is weakening. And by the economy, I don't mean government reports. Those are garbage. They're unreliable. I mean companies reporting much weaker reports. So yes, there's slowdown in growth, but there's still growth. So like Amazon is not shrinking, Microsoft is not shrinking, Apple is not shrinking. They're not growing as fast, but they're not shrinking. So it's not a disaster. It doesn't deserve this drop. But the fact that Powell says I'm going to continue beating on the market to break it, that's the threat. Okay, so the only place where I see tangible drop is real estate. Like I notice around me, I live in Southern California, homes are expensive. I notice around me, homes are lingering more on the market, and they're not getting above asking like they were. Like I have a couple of people that I know that were trying to sell a house and it lasted a long time and they struggled to make the deal because the interest rates have gone up. So now if somebody is shopping on $6,000 a month payment, yes, that's what it costs to live in Southern California. Now it's like 7 or 8. And also people are not spending on their homes because if you cannot refi, you cannot draw 200 grand out of your house to build a pool or buy 2 cars, even though you're not supposed to. But so the wealth effect is tangibly weaker. And believe it or not, that affects the economy, because if the wealthy people that hold up the economy to a degree will hold back spending, and that's a big chunk out of the spending in the US. So it will make a splash. So this week, pivotal. What happens this week? We need another bounce. We bounced too hard recently. We bounced 6%. It was way too hard. But that's because the market makers, the people who control the action, knew how critical it is. Now, this is a good support zone. So we should find footing here. But look at it. Rally is selling, right? So if we rally and we sell a little bit, watch out what we do with last week's low. If we lose it, means we're continuing the same movie of higher, lower highs, lower lows.
Right. Nick, what would it take for the market? Is there a specific event that is going to take us lower? Maybe that's that CPI number coming out, or what do you think?
Whatever numbers that are coming out, I say in the live room, I say that the emotional part is what the CPI affects. The CPI is not the problem. The problem is what Powell is doing with the CPI. If you tell people there's inflation out there, do they really need to know that? They already know that. They go shopping. They know how much cars are. They know how much milk is. So they don't need a CPI to tell them it's high inflation. Everybody knows it. Has anybody seen a drop in prices? No. Right. So do you really need the CPI to tell you there's a drop in price? No. So the CPI is making tangible the fear of Powell. The only risk to the market, I'm going to say it again, is Powell's words, not even actions, his words. Him raising rates a point, 3/4, a half, a quarter is not going to make or break this economy. Him saying, I'm going to keep doing this for another year, that's the threat to the economy. So a point here and there is not going to make a difference. But if you say a point here from the eternity, that's the threat. It's his words, not even his actions. So Apple will still sell a schmut ton of phones if you raise the rates 1 point or 2 points. But if you say, I'm going to keep raising rates to break all the buyers and have all kinds of unemployment, that part is the scary part. So the CPI is important not to the economy. It's important to the psyche of the investors. It's going to raise or drop fears. And here's my advice to you. If we rally on top of a CPI, it's a relief rally. Don't chase it. Fix things. Book profits if you were long, fix trades that got better on the rally, buy protection if you still need it, because we are still in danger of dropping 1,000 points after that, okay? Relief rallies off of, the CPI is not good. Bad news is good news, which is crazy, is a relief rally that is fadeable. It fades versus a change in news. Like if he says, okay, I'm close to being done, that's a change that will sustain itself. So don't short that rally. But a rally based on a report that is not bad is a relief rally. Thank God something bad didn't happen. Nothing good happened. It's something bad didn't happen. So don't confuse the fact that the rallies, the bulls are done. No, the default should be you see it happening until you see proof. And where do you see proof? When you rally and you sell off, and then you make a higher low, and then you rally, you make better progress, and you make a higher low, and you rally, and you make a better progress, and you make a higher low, suddenly you have a smaller ascending buy the dip mode, challenging the bigger sell the rip mode, and then you pay attention to levels that are important. Like if you take this level out, whatever that is, 430, whatever that is, that's really good news. That's really good progress. That means that we may have done a rounding bottom. Then I'll start saying, oh, we take that out, we're going somewhere. But that's way, way far in advance. Let's make the first step, get a rally. Second step, don't drop lower than where you came from. Third step, make better progress. And then repeat.
Are there any signs, not just in the charts, but in the market, that is making you so optimistic about a reversal, or are you neutral, or where are you with this?
I'll tell you where I'm at. So fundamentally, I believe the Fed is a moron. I'll say it with complete confidence. Not because they're idiots, because they don't have the tools or they don't have the history. For some reason, they're always late. They use backwards looking reports like the CPI. How long did he tell us based on the CPI, based on whatever reports he still sees? How long did he tell us, don't worry about inflation? Everybody's been screaming about inflation for over a year, right? And they've been saying transitory, 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 based on their reports, based on all the information that had. That's the same information they're using now. The same information they used last year to tell us, don't worry, they're using now to tell us, I'm going to crush you. And I'm not going to stop until my indicators tell me so. Well, your indicators were wrong last year. What did you do to fix them? Nothing. They're using the same indicators to be wrong again this year. It's a guarantee they will overshoot. It's a guarantee. They did it in 2018, and then the market crashed and said, flip it. You're wrong. And he did. It was under Trump. So he will need political pressure and business pressure. So until all these geniuses out there, you know, JP Morgan heads and Buffett put pressure on him, saying, you're what are you doing? You know, consider the fact that you're late. So last year he was with confidence telling us,
he's not
don't worry, don't worry, don't worry. And then, holy crap, panic, panic. We do have inflation. It's not transitory. It's runaway, and it's too late.
Well,
right?
The other thing is that they're saying, well, they were saying that, you know, the economy, you could say the economy is strong or not, but if the GDP is contracting, that doesn't add up to me. And then how are S&P earnings going to hold up in an economy that's it just doesn't make sense to me. It seems like something's going to break, Nick.
Well, what I said is we do not have a recession. We have something new that we've never had before, and I made up a word and I mentioned it here to your folks. It's excession. We have excessive everything everywhere, and we have recessionary reports which are bullshit. Those reports from the government are bull crap. The report from the government are crap. The fact that we have a dropping GDP, that's because we had an artificially huge GDP with trillions of dollars with free money. Yeah, of course, relatively, we're going to be doing worse than before. But look at Apple, look at Amazon, just to use two companies. Look at Facebook, look at Google. There's no recession inside those P&Ls. Those P&Ls are red hot, red hot. And there are hundreds of other companies like them. The only recession is in the government data. And also, the stocks are already in a recession. So on Wall Street, the recession word means minus 20%. We're below that by far. So we're already in a stock recession. Whether the economy is in a recession or not doesn't change how I trade stocks. It doesn't. You have all these rules. Oh, when you're in a recession, you have to get away from tech. Okay. So I ditch all tech and jump into what? Yeah. So trade your brains, not what people say. So if you do homework on a company and the company is bare bones, like Amazon at one point, Intel has a PE of 5.8, and the price to sales of 1.4. So consider it being a pizza shop. It is now sells, you can buy that pizza shop for 1.5 years worth of sales. How cheap is that store? You walk up to a successful pizza shop and you say you're going to buy their store for 1.5 years worth of sales, they will laugh you out the door. That's what Intel sells at today. 1.5 times sales and like 5.8 to 5.85 PE. That is insane. That's like 1/3 of Exxon.
Right. Nick, let me ask you, do you think, I mean, it could be obvious or not, but do you think the Fed at one point can pivot if he sees at one point, like, things getting really bad, not just in the stock market, but just, average people in the economy with the hikes?
I missed the question. The Fed does what?
Do you think that Powell would pivot if he sees real damage in the economy?
He will pivot. He will pivot when the prevailing opinion forces him to pivot, like it did in 2018. In 2018, the crash in Christmas wasn't that devastating in the stock market, but everybody was on board, from the president on down, to like, what are you doing? You're breaking a perfectly good economy, right? This time we have inflation, so nobody's saying it, but they should be saying it. I'll give you an example. So I don't want inflation to be high. I promise you. I live in California. We pay, my son drives a diesel. Forget about it. Our gas bill is hundreds of dollars a week, hundreds for him, one truck. So, and it's a big spend. So I don't want inflation. However, I don't want unemployment. So his job, he would stop raising if unemployment is 6%. So his goal is to cause people to lose jobs. Read his reports, read his Jackson Hole, read his minutes from the last meeting. He wants unemployment. He wants to cause unemployment. He wants you to not have a job so you don't spend money. So you have inflation because you have too many buyers to too few pieces of things. I'm in the market for a vehicle. I like trucks. I wanted to buy a truck. For me to buy a used Chevy, it's 60 grand. Used. They used to have $19,000 work trucks. You can't find those. Those are 40 now. So why? Because for every buyer of a pickup, for every truck, you have 20 buyers. I'm making up those numbers. You have a lot of buyers. So his job is to make sure that there are only 5 or 6 buyers. How? By causing the other people either to lose their jobs or think they're losing their jobs. So he wants to destroy unemployment to control demand because he cannot control supply. He can't make more trucks. So he will make fewer people buying trucks. That's just one example. Same with homes. People outbidding on homes. Well, if you cause unemployment, you crush the home buying process. If you raise rates, you crush the home buying process. So he's trying to make fewer buyers. He's trying to break demand because he cannot control supply. He can't build houses. He can make sure fewer people can qualify. He cannot make more cars. He can make sure that fewer people have a job that they need a car, or they think they're anyway. So you stop frivolous spending. So the fear of Powell, I think, is what's causing the stock market to fall. I tell you this, turn off all the news. If there was no news of Fed rate hikes, what would happen to Apple stock? All by itself. No news of Fed rate hikes or cuts. Nobody knows about it. What happens to Apple stock tomorrow? Is there a reason to sell Apple all by itself from the Apple P&L? There's no reason to sell Apple stock from the Apple P&L. The only reason that Apple sells off tomorrow or the day after is because if Powell says, I'm going to keep raising rates. That's it. Words from Powell cause it. Rate hikes, the interest rate level is not a reason to get rid of Apple stock. If the interest rates were 7% right now, nobody would sell Apple stock based on that, because that's what's going on. But because of the words, it's that's what's scaring people out of equities. They don't know where it's going to end. They don't know how much he wants to test the resolve of this.
I mean, you can't even trust him. He's been wrong all this time. So at this point, the best thing that we can do as individual traders is to, like in the live trading room, is just to talk about it as it is, right? Like you do.
You just don't trade the headline, trade the price action off the headline. Perfect example is on any given day, if you tell me there's an earnings report on company ABC, how would you trade it? I would say I would wait for the reaction and trade the reaction. It's easier for me to trade the action after it starts happening than to me to guess which way it's going to go. So if you had told me what Monday was going to be like, I would have said up because we had a down day before. But I'd be guessing, and your guess would have been just as good as mine. If we have a report on the CPI, if the CPI comes out before the market opens, which I think it does. So if you tell me the night before, are you buying calls or puts? Neither. I don't know which way the CPI is going to go, and the reaction emotionally is going to go by way of perception. You can make a guess, or the next morning you see what people guessed and see if you can make money off of it.
Right,
So
Nick.
the active trading inside the trading room is solid. It's bulletproof, close to bulletproof as possible. The guesswork overnight is 50%. And somebody's asking that they joined, and where do I post these iron condors? Those are discussed in the live room. Rarely do I post them anywhere else because I don't want somebody to take them and forget about them and they get maximum loss. These are hands-on. If you don't have time to monitor and pop into the chat room, the live chat room, and say, hey, what are the levels today? Okay. What should I look out for? Okay. And then pop in 2 or 3 times to check on them. I don't want you taking them. So I don't post them anywhere else. Come in the live room. We'll talk about them. Say, did you discuss one? I had that question at least 10 times on Friday. Hey, Nick, sorry to bother you. Did we already discuss an iron condor? Yes. And here's what they were, but now it's this. Yes. And here's what they were, but now it's that. And yes. And if somebody took a credit put spread on Friday and they didn't close out of it, they lost money.
Right, Nick. Let's do a quick pivot here. So for those that don't know what that is, what is a credit put spread? That's your bread.
Okay,
yeah, that's the bread and butter that you do in the live room. And for people that have full-time jobs, we've been talking a little bit, folks, about what's happening out there, but more importantly, pay attention to how Nick trades the markets for full-time active traders in the live room, because that's what really matters here.
Right. So let's say this is the opening and we open here. It's really hard to guess. It's easier for me to guess where markets are not likely to go than try to say where it's going to go. Let's say this is the open and we have 8 hours of action. I can make a bet saying that given the information I have in the options, given what I have going on in the day, I think it's going to be hard to be here and it's going to be hard to be here, right? I can confidently say that rather than say, I think we will be here. Or I think we will be here. I mean, that's a possibility, but those odds are much lower than me saying we are not likely to be here and we're not likely to be here. And that statement I can put into action by selling risk on the SPX, XSP, on the SPX. And this is called a, let me clear all drawing. So if I sell risk up here, meaning if I say, we may meander, but we're not going to get there, I will sell a credit call spread. It's also called a bear call spread. It is a place where I sell a call that opens risk, and then I buy a call above it. These are not trade alerts, so don't look at this. And I buy a call above it to limit my risk. And I collect 50 cents on a risk of $4.50. It sounds wonky. Let me explain it in a second. And then I do at the same time, or the same day, I'll do a credit put spread. So this is called also a bull put spread. This is a bullish. This is bearish, but it doesn't need a drop. All I need is price not to do this. This is bullish, but it doesn't need a rally. All I need is price not to do that. So this scenario makes me lose money. That scenario makes me lose money. If I collect 50 cents here as well, so now I've collected $1 in total, and my risk is 4. Either way, if price goes to 1 million, I can only lose $4. If price goes to 0, I can only lose $4. Well, that's 25%, right? 1 divided by 4. The reward to risk is 25%. Who wouldn't love that in one day? And your odds are 85% chance of success and 85% chance of success, theoretically speaking. So the day on Friday, if you didn't close this one early, you got blown out if you watched it, because we fell and fell and fell and then fell some more and fell some more and fell and fell and fell and fell some more. This is where you stop early and you say, I had profits, and they did have profits at some point. But if somebody was too greedy and they didn't close it, Then they had the chance to close for a small loss. And if they were greedy and didn't close it, then they rolled it the next day. So they said, you know what? This looks like it's going to get blown out. Let me close it here and I'll just push it off until Monday and try to work with it on Monday. If somebody did that, no issues. If somebody did nothing, they took a loss.
Right. Really quick here, Nick, I just want to point out the importance of managing the trade. It's not just opening the trade. For all the new traders here, or even experienced, it's not opening and closing the trade. It's managing the trade that really kind of gets down to it, right? And that's what you do the whole day because you're there 9 to 5. So that's the most important thing.
Yeah, well, speaking of that, so when you take a risk, let's clear that. When you take a risk, I'm going to give you a minute to answer that question for yourself. I'm going to give you a few things that you need to add to your task list before you take trades. So here's the thing. When you take a risk, try to explain risk to me. I'm going to give you 10 seconds. Try to explain risk to me. Like you're throwing a class. How would you explain risk? I know it's a stupid question. It's super important though. And I'll tell you why. I deal with options, and this is very important for options. So I'll give you another like 10 seconds. And then I'll tell you what I think. Okay, so the risk is two pieces. The first piece, everybody got it right. I guarantee it. Everybody got it right, which is, oh, how much money I can lose. Okay, risking. Don't risk more than I can afford to lose. Don't get blown out. That is absolutely correct. You don't take a risk that could severely damage your entire account. That is irresponsible. My trades only require $400 worth of margin, by the way, $400. That doesn't mean I open a $1,000 account and trade that trade. That means half of it, 40% of it is done in one trade. No, but it's doable. So the first piece is how much can I risk? That is a decision you make and you move on. You don't manage that part. The second part is the part you manage, which is what? What are my odds of success? When you take a trade, you need to assign yourself a tangible odds of success. I mean, or failure. What are my odds of falling or winning? So that's the part you manage. So with my concept of selling an iron condor, which is what I told you, sell a call spread, sell a put spread, I have 85% chance here and 85% chance there. And I didn't make up those numbers. Those numbers you can pick right off of the options chain, and we'll get, I'll explain that to the people who actually join. Luckily, it's just, you read it off of a table. So, and it's updated minute to minute to minute to minute. So you can tell, okay, now my odds are down to 70. My odds are down to 60. Okay, that's too close of a coin flip. I don't want it. You get out. So now you have a tangible decision-making process based on this one. It's called the delta. So this is the risk. If you don't address your risk every day based on this, it's crazy. You're just gambling. So please, next time you take a trade, before you do that, make sure to be consciously writing down number one and number two. And number two, revisit every minute if you're trading intraday,
right?
Every day if you're trading intra-week, twice a week if you're trading intra-month. Depends on how fast you're trading. So number one thing to add to your routine, break up your risk into these two things, please. Okay.
For those that are new though, remember, you do have, if you don't know how to do this, don't feel overwhelmed. Nick has a beginner kit essential for everybody that's starting out. They helped me when I started out with options on what is a credit put spread, how to use them, setting a stop loss, managing your wins.
Yeah. So this one is what are options, what are puts, what are calls, what are spreads in general, what is a credit spread? That's my money maker right there. And a few other things that we will continue adding. It's time to add some more to them. Like what's a cash settled options? Pretty important. SPX is cash settled. That's why I like it. I like it a lot. So there's so many different levels of experience, but I'll tell you one thing. Those of you who joined or who are going to join or who just joined, how do you take your first trade? How much money do you risk? Let's see. What's the answer? Zero. You take paper trades, fake money. You trade on paper until you get the concept, until you get a week or 2 or 3 or 4 under your belt and saying, yep, it worked. Yep, it worked. No, it didn't, but I know what I was doing. No, it didn't work, but I knew what I did wrong. You practice with fake money. If you jump in and you take the first post of trade with real money, I think you're being reckless. Nobody should do that ever. So paper trade, $0. $0. 15 delta, I like that. That's the kind of stuff we do, Ravi. When is the next options report coming? I have 2 weeks without receiving my report. I don't know what you mean by report. I post everything in the chat room. If you're in the chat room, you'll see it right there. Where at? In the chat room. Okay, so I post everything for the team to disseminate. So you should get together with Hot Rod and tell him how come you're not getting your messages. In here, I post everything. Everything I produce every day is in here. You just jump in here and everything is posted in here. Reports, weekly reports, weekend reports. If you belong to the chat room, that's where they will be. If you belong to an options member, the ultimate members get 1 report a week from me. Maybe that's what you're asking.
Yeah, but that's something separate here. So this is just for the live room, right? So Nick, really quick, somebody's asking about, well, look, I guess we kind of have a lot of questions here piling up. Let me just go through them really quick here. And then we can get back here with the session, Nick. All right, so thanks a lot, folks, here for this, for sending these. Are the sessions on Sundays recorded? Yes, Ali, they are recorded. Nick will post them in the live room. I think you can see, right, well, he'll show you there where they are. It's pretty much all 150 stocks that he goes over. Does everybody that joined get a free laptop? Yes, that is true. Everybody that joins before midnight will get a free laptop. Chat room schedule, good question, Joanna. That's Monday to Friday, 8:30 a.m. Eastern till 5 p.m.-ish Eastern. That's Monday to Friday. Sunday, 10:30 till 1 p.m. Eastern, right? So Sundays are included. That's part of this special thing we have going on till midnight. Is there a money back guarantee, Joe? Yes, there is a 30-day money back guarantee for anybody that joins till midnight. Mary, what is the price at renewal? That's the same as today. It's like we have a heavy discount on it until midnight. That's going to be the same price you renew next year. Next question, how much capital is required to do trades in the chat room? I think Nick went over some of those, as low as like $400 for those SPX trades. And Julia, do you teach the strategies you trade from A to Z, Nick?
Yes, I do, but not in an official way. So if somebody's starting out completely new and they want to learn everything from A to Z, there's not an official class for it, but I have all the supporting documents. So was it Julia? I think it was. So if you joined today, I would say go watch these videos. Start with this one and that one and this one and that one, and write down every question. You will have questions and come back to me and say, I didn't quite understand that. I will elaborate. These are from A to Z. And then you come back and we'll graduate to another video. And if you ask me during the market open, and I have my open mic and I have my shared charts, and there's a lull in the action, I will go ahead and explain it. I do that at least 2-3 times a day on different concepts, including doing butterflies, iron condor. How do I read the tape, so to speak? Like, we can guess pretty accurately what the market makers are looking to do with the price action based on the options data. So we discuss that a lot. We also discuss longer term opportunities. So yes, we do have classes, but they're not official. Like, there's a class on Wednesday doing this or that. There's a class open every day. From the minute I sit in my chair and I flip my my microphone on, the class is in session every day you want. And if I'm not live, and you say you come up with a question on Saturday afternoon, you come in here and you ask me, hey, Nick, what did you think about this? Or you direct message me, hey, Nick, like this person direct messaged me today. What do you think about this? So the class is in session. Anytime you want to learn something, just ask and you will learn. I don't have official classes. Those are different programs at different price settings. So that's where Benzinga comes into play. But for here, the offering is you will have a class in session every day that the market is open, and off hours at your own speed. And you have 30 days to cancel. And if you do take that, definitely take your time, because you might jump in and feel overwhelmed in a week. And if you had stuck with it another week, you'd have gotten over the hump. So it's you will learn as much as you want to learn. How's that? I don't leave questions dangling. I may push them off for a couple of hours, but usually we'll get the bottom of it. All right. So we addressed the fact that we have a complete dedication to education and helping people do homework. So it all starts on Friday night. Saturday, I do all the homework. Sunday, I share the homework with you. So basically doing it again live. I record it in 3 different videos. I think there were 3 last time. Last time there were 4. This is 3. Hundreds of tickers. So Sunday night also will get us ready for the week, big picture strategy session. Before the bell rings on Monday, you will have another write-up from me, very, very short, with all the lines for the day that are important, something to look out for, some things to look out for. And then that repeats every day. All day session, open every day. Whole bunch of learning, whole bunch of trading opportunities, whole bunch of iron condors done, a whole bunch of trade management done. If you're in a trade and you're stuck, what do? I have somebody looking to get out of Tesla in order to take some money off the table, but they want to stay long Tesla. So how do we stock replace? I'll teach you that before we leave today. Just
Nick,
in big picture.
Also, like there's a big. It happens to almost everybody, right? New traders trading by themselves. Just going to share this poll really quick here. About 84% of the people that are watching this are trading alone. Folks, Nick, just go ahead and let them know. I mean, this is
do not trade alone. Do not trade alone. Am I still sharing my screen? It looks like, yeah. So do not trade alone. I'll tell you why. If you're trying to trade alone, you make mistakes and you forgive yourself too easily. Plus, you miss out on a whole bunch of trades. You will be shocked at how accurate my members are. I mean, they're very accurate. They say, I'm buying puts here, I'm buying calls here, I'm buying puts here. The one guy in particular sticks to mind, Ryan, because he posts his trades and they're slow enough for me to take them. I'm slow because I'm doing 3 things at the same time. I made a mistake last week when I bought calls, I think, or the week before that. I took a position that was short term and I forgot I had it. It went green. I forgot to book it. Market expired. It wasn't big, but I shouldn't do that. So I could take his trades because they're usually overnight and they're usually 2 to 3 weeks out sometimes. So he'll say, I'm shorting FedEx out 3 weeks using the put spread, a put out in September, so and so and so. I'm just saying that as an example. And he will say, I just reopened a put. I locked some profits. I took some puts off the table. I took some calls off the table. So you will see many like this. You will have another guy who trades a lot faster. We have a couple of girls that trade shares and swing traders too that are good. We have girl technicians that are good. We have guy technicians that are good. We have people overseas. We have people here. The community is growing and we're leveraging. For example, I know some things and I taught it to some guys. One of the guys taught me something the other day. So now I'm incorporating that something into my strategy as well. So the level of knowledge in the room is huge. Like I'm saying what I'm saying all day, and then somebody jumps in and says, I'm seeing a change in the algo flow. So here's a person dedicated on the algo flow. Another person is dedicated on the dark pool money. I'm not making this up. You will learn it. You will see. Dark pool money is, I'll show you. For
That's
example,
interesting. I saw that post that person put. It was very interesting. Really quick here, Nick. I have to give a big shout out here to our newest family member, Ryan Walter. See where are you, brother? Let's go.
All right,
Shout out to
cool,
Walter.
cool. So yeah, the PayPal I think has the
Ryan's in the chat. What's up, Ryan? On the Zoom
which
chat.
Ryan?
Ryan just joined, Mr. Ryan Walter.
Oh, okay, cool. That's because I turned it off. Okay, so here are dark pool levels that were here weeks ago. So I kept note of them. So what dark pools are, just mysterious money that comes out of nowhere and trades something at certain level consistently. So when we're falling into those prices, they will become support. If we're rallying into those price levels, they will become resistance. The S&P had a few big dark pool lines. I mean, we're talking billions of dollars that jumps in. So, okay, it's time to bug Nick while he's trying to do some work. So the idea is to have multiple lookouts for the price action. And that's what happens. That's what Hot Rod was trying to tell you, is that trading alone, you miss out. You may be blindsided, you make mistakes, you forgive yourself, you're not as diligent, and you're missing out on ideas, not to mention on alerts.
You get too emotional, and maybe you start watching CNBC and then you screw up big time.
So the equivalent of you flooring it on the freeway without a radar detector. Wouldn't you rather have a radar detector? Wouldn't you have rather have an app that tells you there's a speed trap ahead? Yeah. So it works better when we have more than one person in the room trying to help us out. So one thing I didn't bring today were the testimonials. I apologize. I just ran out of time. Recently, the testimonials have been mind blowing. I mean, like mind blowing, to the point where they touch me. Like, it's like, this is a personal note. I got one this weekend. I can't share because of personal information in there. But I'm like, what? I cannot believe this, that this person has a particular situation that's incredibly tough. And then he says, I'm in the room and that's like a good part of my day, even though I can't follow with a lot of the stuff. And like, I can't believe this. So hopefully we're changing lives. I mean, innocently, just opening people's eyes as to what happens in the market and stop this incessant reading news out there and trying to react to it. If you're trading based on news, you're making mistakes. I could have traded last week without one bit of news, no CPI, no PPI, no bullshit labor report or anything like that. So the labor report said that we had a drop in unemployment. So this guy, Powell, is trying to destroy the economy and the unemployment falls. Garbage data. So I'm a financial analyst in a previous life. Like, I did numbers for CEOs and board meetings. If I deliver a report that is as accurate as the government numbers, they would kick me out so fast, they wouldn't even let me pack my desk. They would throw it out the window. In the private sectors, the reports from the government, you can't build a bridge on. You can't build it. Not that it will collapse. You cannot build it with the tolerance of accuracy or inaccuracy, I should say. And this guy is leading the world economies, and he's not an economist, by the way, to using these bunch of numbers. So
yeah, Nick, really quick, let me ask you what you think about this, man. I saw recently that the United Nations is trying to call on Powell to pivot. Like,
but I'll tell you why. Listen, it's a serious matter. Bang. If you've never seen Bang, they don't pay me, but you should try it. Half a can. So here's the problem. So the Bank of England, this all started, I think, because the Bank of England was doing rate hikes. And then they realized that, oh, crap, we see signs of tremendous changes. So they said, we need to go to rate cut. I don't know where they ended up. They flip-flopped back and forth. I don't know where the PM said last. I can't remember her words. Was she on board or off board? I don't know. But it brought up the conversation, and the UN is begging the US to stop raising rates, because when a country is propping up, when the central bank of a country is being hawkish, like the Fed, it makes the dollar super strong. And when dollar is super strong, it destroys economies out there. Everybody that buys anything in dollars, everything is priced in dollars: oil, gold, commodities, metal, everything. So it puts pressure on purchasing power out there if we're exporting stuff, and the prices of stuff falls too that way. But it puts downside pressure on those. But it's blowing up countries. My mother lives in Lebanon, and this is causing a ruckus on top of the problems they had. I mean, it's not like they're only the dollar, but the dollar exacerbate things. So what is that statement? We export inflation. And also the old statement that if the US caught a cold, the world would sneeze. So the UN is pushing the Fed to stop that, not for stock market purposes, but because they are killing economies out there. They're causing more grief to the economies that are already struggling out there. So it is not. So the comment is probably why people are expecting so much out of these reports. So on Friday, the jobs report came out, and we had a hissy fit. What's the mindset? What were you expecting? You, the proverbial you. What were you expecting? Oh my God, 6% unemployment, and suddenly, yes, now Powell's gonna flip. I think it's un-American to root for terrible economic reports. Ask me if I would rather pay $10 for a gallon of milk or have 10 people out of jobs. I would pay $10. Yes, it's tougher on the less fortunate, but it would be tougher on the less fortunate if they were unemployed. So there's a balance. I think that we should root for good economic reports. So, and this guy should find another way than destroying the economy to control inflation.
Right.
Maybe focus on taking down oil prices. Like,
Nick,
what's wrong with the US saying we're putting ESG on hold a little bit? Maybe we have to discuss pumping some more oil.
So let's talk about OPEC a little bit. That's a good subject for you there. OPEC.
Yeah, well,
energy.
that's I'm talking about OPEC. So what if the US just planted the seed? They don't even have to do it. You know, Wall Street prices everything 6 months in advance. If you tell Wall Street that there's a chance the White House might say, you know, maybe we pump a little bit more, just say it. They don't have to do it. Oil prices will drop. Just like oil prices rally when OPEC says we're going to cut production. And they're going to lie. I tell you that OPEC will probably pump as much oil as they can. So OPEC needs price of oil either astronomically high or 55. Somewhere in the middle, they lose market share, and the extra money they make from the dollars doesn't account. So there's a math to be worked out there. I think 55 to 58 is where oil should be. Of course, it's much higher than that, but I think that's where it'll end up probably by early next year. But if you drop oil drastically, you take care of a lot of the inflation, I think.
Right. Nick, where do you see earnings are about to start next week? Banks are reporting. I know that you're always looking at earnings. What can those earnings tell us about what might be coming or happening?
So the problem is, I think we have an airline or two also that report.
Delta.
Yeah. So let me see here. 1 second. I want to speak to it because it's important. I'm glad you brought it up. Okay. So these are the earnings that I see. This is from Earnings Whisper. Of course, Pepsi is important, but that's not a market driver. We have Delta. Is this Taiwan Semi? This is important. DPZ, not so much. Progressive, not so much. Here's the bank trade. The bank trade is funny. Usually there's three that big ones that report the first day. So JP, Morgan Stanley, and Wells. Those are the big ones. So if you want to guess a trade on them, use the other ones that don't report this week. So let's put it this way. If JP Morgan rallies, Bank of America would rally. So if I buy calls in Bank of America or puts, and JP Morgan makes a move in my direction or against, my calls don't suffer as much from the implied volatility crush on Friday as these guys. If I don't nail it, and even if I nail it, with the VIX being so high, everything I buy, don't buy any options of this week for these banks. You will end up probably paying quadruple as much as what you should be paying. So the morning open, the bell rings, you're going to lose half of your investment of calls or puts just from the bell ringing. So use out weeks to buy, sell some against this week, and also use different tickers. And on their own, I would like to be long JP Morgan and Bank of America into their support, but not into earnings. They don't have a good history in their reaction to earnings. They usually fall. So let's see here, Bank of America, 1 day. So this is the earnings. The last one was a rally. The one before it was pop and drop. The one before it was a drop. The one before it was a pop and drop. So the bank's fundamentals are solid. People are saying this is like 2008. This is nothing like 2008. In 2008, we had a balance sheet problem. Now we don't. We don't even have an income sheet problem yet. We're just trying to make an income sheet problem. That's it. So the banks are solid. But look at that. Before this rally on Sunday, this was Friday. So Sunday night, I did a video. I said, I would like to get long Bank of America against this candle. And then Monday opened up big and Tuesday up big. So I missed it, right? So now it's coming back into this. If it weren't for the earnings, I would have gone long Bank of America. I would have said, woo, that was a gift. But the caution is it could be 25 by Friday, next Friday. Why? If it loses this support for whatever reason, through fault of its own or through the market drop, it's going to probably hunt 25. If it happens before the earnings, I may take a few calls for a lottery ticket. So if the banks collapse into the earnings, I will get long the banks for a trade, not an investment, a trade. I don't believe them to be an investment.
Right.
They're solid companies. They're just not exciting for my taste. So I would just buy calls or shares and sell calls against them or something like that.
Speaking of collapsing, maybe we can look at Bitcoin, and you can kind of give us a sense of what is happening in Bitcoin. If you're long crypto, I know you're long Solana. For those that don't know, the options chat room is not just options. Nick is a crypto maniac, as you will find out.
Well, I am not a maniac, but I'm pretty damn good. So here's the thing. I'm a fan of proving people wrong in crypto. I'm going to tell you one thing. I believe strongly that everyone here watching and everybody will have to, in the US at least, will have to deal with crypto every day. In other words, everything around us is going digital. Money will too. And I don't think central banks are going to go and reinvent the wheel and discover a new technology to create electronic money. They're going to come to the crypto sphere and say, hey, would you lend us your technology? How did you do it? It's already there. All they have to do is just plug the dollar into it. So you will have to deal with crypto. Get used to it. Learn it early. So in the group, last October and November, I put out a video saying Bitcoin is going to likely correct down to the low 20s, maybe even 19. Those were my words back then. And here's how it's going to go, and here's what I'm going to do. So I invested at 33, I invested at 25, but I said ahead of time, I'm going to take small bites, and when we get to 20, I'm going to load up. So when it got to 20, I did not load up. I tripled, but I'm still not even halfway to a full size. Why? Because now at the time, right here, there were a couple of technicians that I respected that opened the door for 11, 9, and 5,500. So I was like, just in case they're right, I'm going to leave some dry powder to pounce later. So is this a good start in Bitcoin, crypto? Yes, it is a start. It's not a jump all in. How can I do it? So let me ask you this, a little quiz. What's the riskiest part of investing in Bitcoin or crypto? Just think about it. What's the riskiest part in investing in crypto? Look how pivotal 25,000 is. The riskiest part to me is, where do you put your money? Which platform do you trust with money? That was my biggest struggle. I opened an account in KuCoin. I walked into it. I was like, whoa, this is a casino. Not for me. Nothing against the company. It's just scary. So I opened several. I landed in crypto.com just because I thought they were spending the most money in the US for advertising. And they actually report to the IRS, which was very comforting to know. So I opened an account there. But now there are local trading platforms that offer it, like Tasty Trade or whatever that's called, which is pretty good. And more importantly, if you want to trade Bitcoin, you can do it via Bito, which tracks the Bitcoin futures, and you can trade it out of Schwab account or whatever you want. And here's what I'm doing in Bito. Other than buying shares, recommending buying them in the 11s and selling them in the 1250s actively for the members, I bought them twice, both profitable. I'm also selling puts, naked puts, to own shares. I believe my last put sale was 1150 and it expires Friday. So if Friday, Bitcoin has fallen 3 to 5%, I may own more of it, may. And if not, I created a few $100 out of thin air. So that's how I'm dealing with it. Every week, I sell risk below current price at the risk of getting assigned. So if I sell a put, I am saying I will buy shares 1,000%. I wake up, maybe I own shares, maybe I don't. So that's one way of dealing with it. There's also the grayscale. They give you, I forgot, GBTC is one, or Ethereum, ETF or fund that tracks Ethereum. Ethereum has gotten pretty good solid price performance. This is a choppy chart, but you can do it ETHUSD. That's Ethereum, the second biggest coin out there. So if you don't know what Ethereum is, let's demystify crypto. Bitcoin does nothing. Consider it gold. It looks pretty. Everybody wants it. We only have so much of it. In fact, it's more rare than gold. So if you believe in the concept of having gold value, then there is always going to be value for Bitcoin. Why? There are billions of people that love it and want it, and there's not enough of it to go around, just like gold. Why is gold valuable? For the simple reason that we like it. It's a yellow rock in the ground when you first see it. It looks like a yellow pebble. Somebody thousands of years ago said, hey, I'll trade you this beautiful yellow pebble for a goat. And somebody else agreed, oh yeah, this yellow pebble. And then they figured out how they can melt it and make it look pretty. So gold has value. Bitcoin has value for the same reasons.
Right, Nick. And yeah, you were talking about crypto and other stuff there. Maybe after done with the crypto thought, just let us know where you're at. We talked about the financials, but you talked a little bit about real estate. I know that you have a lot more context to the real estate stuff.
So, okay. Yeah. Well, I was going to say that for Bitcoin, the crypto, Ethereum, if you don't know what it is, if you heard of the Swift, if you go to do a wire, your money goes over a network, most likely called Swift network. It's an international network that organizes this money going here and there and there. Ethereum is that equivalent in the crypto sphere. There are a couple of competing other networks like Solano and Cardano, which is ADA, the coin for that, SOL and ADA. They're competing networks, but Ethereum is the chief. So it's a good, solid investment. I entered it at 880, which is basically at the low, and the Solana at 2740, which is in the early 30s now. They both had, like, I more than doubled my money, but I didn't book it. I locked them. I staked them. So I earned 3% on them. I used to earn 10%, but the government put a kibosh on that one. So I own 3%. So as far as other big concept, I'm afraid of real estate, like Zillow and such, because of what the interest rates is doing. It's slowing down the actual transactions. So I have a friend who does commercial real estate developments. They had 6 or 7 deals on the table. They all died in 1 month because rates shot up so big. You spend months and months negotiating a deal based on payments, and then the interest rate changes drastically, and it changes the feasibility when you're talking millions. Even on a one house level, you know, people who are shopping for $1.5 million suddenly have to shop for $1.1 million, right? Again, my numbers are big because I live in California. You can't buy, I mean, that's what the prices are. So pick a sector that suits you. I still like tech. I still like good companies that are depressed. Like if you want fixed income, something like Verizon, although the stock is acting hideously. I own a few shares that I just recently bought. I'm down. I think I bought them in the 43 area, and I shared it as a trade, but I said, this is a slow trade. I'm buying shares, part position, and I'm okay because I'm getting paid 7%. So if I hold them a year and it stays down at these levels, that means I lost 7% of my investments, not the end of the world. So I'm not going to panic out of it as if it were a trade with a stop. So anyway, so these are just thoughts.
Right. And yeah, Jamie has an interesting question here. I work full time, but I would like to start putting my money to work. How could somebody with a full-time job take advantage of your live room?
So Jamie, if you have time to read the note in the morning, you can read it to get an idea what the day is like. And then you read another note in the middle of the day. In it will be a trade that suits your speed. You look at it and you say, yeah, no, I don't like it. Skip it. You get another one the next day. Oh, this looks interesting. I'll do that. Or you see it and go, this looks interesting, but I can't do this. I wonder if I can change it. So you reach out and say, I saw your trade setup. Is it still valid? If so, I would like to, change it in a way to suit my style. That's you talking. We come up with an alternative. So this is what the whole process is set for. People like you who don't have the time and would like to participate. And now I'm seeing an opportunity here in Ethereum. So my target with crypto is for them to go back to 44, 46 in the Bitcoin. From what position, right? So like here, this looks like a split in action, does it not? So now that I'm talking to you, hopefully, Jamie, I answered your question. So this looks like a split in action. Let's put it right here. Actually, I will put it right here. I see some good signs. This should be support. There are other lines of support, but I think this is it. Okay.
Yeah.
So the target of this head and shoulders is this. If they can avert that or stop here, like if this was the low that holds this week and we get to here and beat this, I think we beat this. I think after a little dip, we beat this. And if we beat this, this is the target. So from here, there could be 100% rally. There could be. And these are days out, like these are months. So I don't expect it overnight. But there's a path for Bitcoin, crypto to rally back. This is Ethereum, and they all move the same way. They all have similar charts. They move the same way.
Yeah, and Mark is asking a quick question here. Does Nick teach technicals as well? As you can see.
Oh, buddy.
Yeah.
All day. That's all we do. If I'm speaking during the day, we're talking technicals. I just did that, right? Did you see how I just did the Ethereum? That's all we do all day. Except it's on 1 minute charts, 15-second charts. It doesn't matter. It's all day. This is a 15-minute chart. Look at this catalyst right here. Higher lows, lower highs. Ooh-wee. Dang, that is a good battle on Monday. You take this out, you probably take these two out, you probably overcome this, you're up here. And if this happens to crypto, I think it would be good for the markets as well. Because it's an asset. And if you're buying an asset, you're taking a risk. Therefore, it shows risk asset. That's positive. So it just speaks to people feeling comfortable taking risk. So the only concern that I've had for a while on every rally we had last week, every time we had a rally, people start asking me, what call could I buy? Can I sell a put spread here? And I was like, wait, why are you guys wanting to buy everything right now? We had a good, strong day, but look at the VIX. The VIX is the fear factor. It's the CBOE puts it out. It's an indicator that measures fear, but why? Why does it measure fear? I'll give you a second to think about it, and I'm going to blow your mind. This is the reflection of how much premium there is in the options prices for the S&P. So the company that puts out the companies, the big money that sells calls and puts, the market makers, there's a bunch of people with a pile of money that like to take risk. They're selling calls and puts. You and me are buying those calls or puts, everybody, the retail. So when you go buy a call, your point is to make money, right? So you pay $1, you want it to run $3 so you can make $2, that type of mentality. You buy a put to short, you want it to fall to $3. Well, the market maker wants to charge you enough money for the price to rally and not make you any money. So they want to charge you $1, have the price run $1 and die. That's how they make money, right? They sell a straddle. So they're pricing everything almost double what it should be. Why? Because they think they have unanswered questions. So it's like the equivalent of them selling insurance to a teenage boy rather than a full-blown adult, preferably an old lady that doesn't drive a lot. I'm not saying anything sexist. Those are the mathematical facts from the insurance companies. If you're a teenage boy, they're going to charge you the most because they think you're going to have an accident more likely than somebody who's stable and doesn't drive a lot. So that's the math that's in the VIX. It's represented by how high the VIX is. Currently, the VIX is 31, whatever it is. I think the average is 19. So they're almost double. They're charging you almost close to, inching on double because they are uncertain. So they are nervous. The people that make the rules, that make the markets are nervous. How are we not nervous? So when you have a green day and you end up going to buy stuff, you're not nervous. They are. The insurance company is nervous. You should be nervous too. So in the live room, let me tell you a story from last week. Last week or the week before? The week before it. I come in, James, whose name is Fast Trades. He's in and out 6 times a day at least. He posts every entry. He posts every exit. So he's contributing to the success of people that trade fast. I can't match his speed. He goes in and goes, boy, that Baba is looking juicy. I think that was literally what he said through typing. I was like, oh, Baba, I'm not trading Chinese stocks. I don't know the headlines. And then I looked at the Baba chart and was like, dang, that was good. And it was that day right there. And if you look at it, the day started out bad. I think this day right here. And we were down here somewhere. So I said, you know what? I'm going to join you. So I bought calls with him. A whole bunch of people did too. Boom, explosion, 45 to 50% within an hour or two. You can see it from here to here. So, and what did I do towards the end of the day? Or I said, there you go, Charles is here. So they booked profits. I said, I'm selling a call. And I sold a call, which created a diagonal, and we had a whole lesson around it. You asked if I teach. I said how diagonals work. I explained it how it's different from a vertical to a calendar to a diagonal. And I said, I bought the $79 October 21st call to open the trade, and it rallied, and it made 50% to 40 to 50%, depends on how fast you got in. And it wasn't my trade. I just chose the 79. He chose a shorter time frame, so he booked. I didn't book. I had 2 weeks, so I sold that same week call at 83, and that call died for 54 cents in my favor. So I booked 54 cents per contract. So that's $50 per contract in profits. And then I stayed long through this past week, and I sold another one that also died for almost maximum gains, but I chose to close everything. So I finally booked my winning, but I rode it 2 weeks. And it wasn't even my trade. It was somebody else's trade that I hopped on. So That's what happens. Live trading, fast trading, slower trading, iron condors, daily, lottery tickets, last minute. It's somewhat easy. No, sometimes it's quite clear where they're going to close. So there's something called an iron butterfly, which risks $50 to make $450. And it's like a hole-in-one in putt-putt. It's not impossible, but it's tricky, but it's doable. And every once in a while, we nail a few of those. I've hit my limit. Spy butterflies, we use them to capture moves. Iron butterfly is different than the butterfly. So the iron butterfly is basically, don't do it unless you know what you're doing. Luckily, it doesn't risk a lot. You've heard of an iron condor. You sell a call spread, you sell a put spread, and you want price to stay in between those two. On expiration day, if it's the SPX I'm dealing with, I sell a call spread, and if I sell a put spread right here, therefore making it, this is where I want it to close, I collect $4.50, give or take $10. 0.1 to capture, to pin the close. So if the SPX closes at 36.50, like I guessed, I win. How much? $450. What did I risk to lose? What did I risk to lose? $50. My break-even point would be here and here. If SPX closes here, I lose $50. If SPX closes here, I lose $50. If SPX closes anywhere between these two, I stand to make money. So the way I do this is you sell to open the trade and you collect the $450. And with minutes to go, I open the trade to close it and I offer a price. Let's say I'll offer them $3. So I collected $450 to open, and then I offer them $3 to close. And price starts doing this with minutes to go. And at some point, they get to $3 and they fill me. So I collect a profit of 1.5, foregoing the potential of having another $3. But I'm happy with a guaranteed 1.5 and foregoing the 3 extra that I could make. So I leave money on the table. That's fine. But if you don't, you will make $450 for every $50 you risk if you nail the close. We've nailed a few perfectly. We've nailed a lot within reason. And I've done this, I don't know, maybe 6 times in the last 5 months. That's a lot.
Right. And for those that just popped in here, we do have a couple folks here that just popped in. What you are looking at right now is Nick Shaheen live, killing it here with the folks. For you, if you don't know, Nick Shaheen,
not dead, live.
As a live yeah, we are live, by the way, also. But yes, Nick has a live trading room. He's there all day, 9 to 5, the entire day, plus Sunday. Okay. And we're actually really close to capping the user limit in the chat. We're at about maybe 400 people now. In the meantime, you can still join and just be grandfathered in. But the group is amazing. And I remember because, well, Nick, you and I launched this chat room over a year ago. I remember it was just you and me. Now
the live room.
The live room, right? 24/7. And now it's so beautiful. We have an international community, amazing people ready to learn, ready to trade, and you see the people, that the veterans there helping the new traders as they come. So that's great.
So here's another thing. So this green thing here is called the Harmonic. It is a pattern. This one in particular called a bat, I believe. I'm not an expert, but this software expertly draws it for me. I'm an expert at using it. In plain simple English, I am not a harmonics guy. I'm not a Fibonacci guy, but I know enough concept. By the way, I'm an engineer who figured all this stuff on my own. That I'm not from Wall Street. So if you don't want to speak Wall Street jargon, come to me. If you want to beat the Wall Street guys, come to me, because we have Wall Streeters in the group, and between the both of us, we come up to excellent levels. So anyway, when these patterns play out, the target is to retrace. And we have target 1 here, target 2 here. That's why I got excited about BABA. That pattern also exists, I believe, on the daily chart and on the weekly chart. Look at on the daily chart, this green M. Target 1 is somewhere on here, target 2 is somewhere on there. But of course, it's not easy. So first, the 15-minute has to unfold, and then you have the headlines from China that are not playing out. So this is a descending wedge against pretty solid support. That doesn't mean it doesn't go lower. I mean, there's risk of delisting and blah, 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 blah. But boy, oh boy, if this one springs, it will be violent. But take it 1 minute at a time. This is a 15-minute chart. There are sellers at 82.5 and 83. I should have been more aggressive selling calls, but I sold, I believe, the 81 call. So I almost got maximum gains out of it. Almost. I got 70 cents out of $1 and change. It was pretty good. So I'm not complaining. I may re-engage long this week. I don't know. What do I think of Schwab? Those are questions I would take on Sundays. SLB, I don't know if it was on the, let's see if somebody asked about Schwab this time. No, nobody asked about SLB. So we want to do this? All right, we'll do SLB. What do I think of it? When they moved out of the US, I stopped trading it. This was a good beat. This is a good performance inside of a tough market. Are they still oil exploration, or is it not gas? drilling, production, processing, oil and gas industry. I'm shorting oil at these levels. I think the concept of oil to the moon is incomprehensible. It doesn't work with what they're selling me. The same people convincing me to go long oil are trying to convince me that we do not use oil. So it doesn't make sense. The use of oil, the consumption hasn't even yet matched pre-pandemic levels. We could essentially have we be a wash of oil. We have an oil policy, not an oil shortage. That's what I have. And the war is making it difficult. So it is artificially high because of transient reasons. There are several big reasons why oil is high. And I think there's a crash in oil coming like 2011 and 2013 and 2008, I think, 9. So I'm not a buyer of oil. So let's take it, forget the concept. If you bring me a stock that looks like this and say, do you get long or short? I'd say it's too late to get long going into 44. Everything above 44 for the last few months, these are weekly candles. So from here to here, everything above 44 has been death. Yes, it can have $4 or $5. It's better to chase it above here. Or if you get long here, have a tight stop. And how much pain are you willing to take? I would rather get long it below 40, like closer to 38, maybe even 37. Okay, so this is my SLB assessment. Above here, it could go to here, but I would bet against it. For example, I just shorted the XLE, which is basically shorting Exxon and Chevron. Why? Look at this. This is not a place I get long a stock. If they take it out, they go to here. If they take this out on a closing basis and come back and survive the bounce off of here, they go to here. But I'm selling the XLE call spreads to gently short the XLE. I sold it one day too soon and I immediately got into red, but I'm managing it. So I'll stay in it for this week and see what happens. What up? Let's get a couple of tickers while we're doing this. Come on, let's go. Right. You have a call at 43 in what? And 36 put. You own a call and a put? How's that work out?
Give him a taste of the chat room, Nick. Let him know.
I was like, what are you, crazy? Get out of it. No. So let's see here. Oh, come on with these TQQQ. Ricky, forget the TQQ. Forget it. Why? Why are you doing the TQQ? Calls or shares?
He likes the volatility. I mean, you have traders from all sorts of...
Right, but it doesn't hold value. Trade the shares. Okay, fine. Shares,
is he shorting? We don't know if he has puts on TQQQ or...
Well, yeah, no, I don't. The very simple reason why I don't trade the TQQQ. Now, I'm pretty sure somebody here is going to say this guy is an idiot. Me. Like you saying that about me, not about Ricky. So here's my question about the TQQQ. It tracks the QQQ, the NASDAQ. This is where it is now, right? This is where the pandemic is. Started the pandemic, the TQQ is below the pandemic. This guy is supposed to track the QQQ. Well, this is the pandemic, and this is where the QQQ is. Explain that. Oh, time decay, blah, 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 blah. Well, bye. If you cannot maintain your relationship, I don't want to trade you. Plus, I'll give you the real reason. I sold one spread on the TQs, and it was an absolute nightmare. An absolute nightmare. The quotes were bonkers, and it's not a big deal for somebody that has a big account. But if I had a smaller account, and let's say the account had 10,000 in it, and this trade was 10 contracts, $1 wide, so the maximum risk is $700. Worst case scenario in any way, shape, or form, $700 maximum risk. It was quoting me $3, so the maximum risk jumped to $3,000. 2,700 because 300 what I collected. So if somebody had a small account, they just lost 1/3 of their purchasing power, locked up. So it was clearly a misquote, but the platform would not let you trade because of a misquote. So I would rather trade the QQQ, to be honest. So everything I said about the QQQ earlier about the market is happening to the TQQ. I don't know what you want me to say. Bounce here or drop to 200 in the Qs. That's the bottom line.
How low can the Qs go? How low can
you don't bounce here and hold it? The downside scenario is 130 points from here. So what is it? What is that? 110 on the QQQ? Clearly, we have a lot of support. So we will go back to the pandemic levels, but that is not my scenario. So my scenario is that we lost the level here that we're trying to cry about, which is 90 points. So the worst case scenario is 222.
Let's get a sense here, folks. If you have calls, put a 1 in the chat. If you have puts on the market, put a 2 in the chat. We need to know where everyone stands with this, okay?
Oh, shoot.
I'll let you know. I have puts, okay?
1 and 2. Mark is playing both sides. Good job. As long as you know how to make money off of them.
Mac has 2, both?
Short, both. Alicia, long and short.
There's a room full of bears here. Let's go.
Hey, this is how you're making money.
Well, that's the thing. You can't just be a blind permabull and just, like a CNBC like wannabe.
No. So I am a bull. I am happier being a bull than a bear, right? But I don't have a problem shorting, clearly. So I'm looking for a base for the simple reason that I'm going to say it. Nobody says it. We can make an all-time high. All we need is one event to scare everybody. But that event is not on the docket. It's going to have to be a black swan. And then Powell will say, holy crap, I didn't see this coming. Let me stop. Or say, I'm going to stop. He doesn't have to stop. Just say, I'm going to slow down. You remember the statement last year? We're not thinking about raising rates. You remember that? He said he's not going to raise rates until 2024. We're not thinking about raising rates. Who says that? That guy. We're not thinking about thinking.
That's someone that's thinking about it. That's someone that's thinking about raising rates.
Right. Well, now is he going to say we're starting to think about not raising rates? Will he say that? If he says that, that's all he has to say. Maybe it's time to start thinking about stopping rates, stopping the rate.
Let me ask you something. What are the consequences of a lower confidence in the Fed? Does that matter at all? People don't trust.
It matters. We need to get him out of the job. He is doing a terrible job. Whether there's a better person out there or not, this guy is a proven failure. His policies have gotten us into a rut that we cannot get out of. Unfortunately, I believe that we need to live with inflation enough to burn it off. That's it. So keep the policies you have now. Stop with this urgency of breaking everything to fix the inflation. Seriously, folks, his job, the Fed's job, is to create jobs without creating inflation. So last year they were panicked. They had good reason to panic. Oh my God, we need to create jobs. They created too many jobs by throwing too much money. They contributed to throwing too much money. They created inflation. We didn't create inflation. Only government can create inflation. We can't print money. The government can print money. We can only spend it. You give us money, we're going to spend it. So we spent it. So this year, he's going to fix his second part of the job that he ruined last year by creating inflation. How? By breaking what he fixed. So the equivalent would be we gave them a table and a chair and say, please, fix the chair table. I mean, the table leg, it's broken, the jobs. So he took the chair leg to put it on the table to fix it. And this year he needs to take the leg off the table to put it back in the chair. He's failing at both sides of his job, yet he's still in his job. Crazy. Bernanke had so much more pressure on him to do the right thing. Political pressure. He had more political pressure in 2018 from the administration to do one thing or the other. Right now, nobody's putting pressure on him to do anything except bring down inflation, and they're all crying about it because we're going into elections. So one side wants to make the other side look bad. The other side wants to be a hero by doing something, and they're doing the wrong thing. So it's a mess. Expect the unexpected, stay protected, use rallies to get out of trades, not to add to trades. If you're long a stock and hurting, do not add to your risk. Here's another. I told you I'm going to give you 2 or 3 things. First thing was the risk. Put that risk thing. Second thing is never, ever double down. Never ever average down. If you use the DAC, whatever, dollar cost average, DCA, if you use the term DCA, you're making a major flaw. There's a major flaw in your trading strategy, investment strategy. I don't know one successful trader, professional trader, that DCAs anything. What you do is you average into a full-size position. I told you I took Verizon shares, partial position. So if I double down, I'm not making my problem bigger. I'm making myself enter at a better price in the same size I originally wanted to enter. So if I wanted to take 100 shares of Bitcoin and I took 20 BITO, and I added another 20% lower, and I added another 20% lower, I averaged into my position, the original position, at a best price possible without having to be surgically perfect. Versus I take my entire position and then the stock takes a tumble. Oh, I've got a problem. Let me make it bigger. On what planet that makes sense? It doesn't.
Right. Nick, so what is the solution? Another Inflation Reduction Act or Inflation Acceleration Act?
No, just stop with the rhetoric. Stop saying I'm going to break the economy. I won't stop unless I see deterioration in the jobs market. Stop saying that. Just stop saying that. Raise whatever you need to raise and stop being so combative. Every week we have 14 people speaking. Last week we had 14. The week before that we had more. This week we have at least 10, 5 to 10. Sometimes the same person speaking twice in one day. What the fudge do you have to say that you haven't said yet? What are you telling us? They meet. They tell us what they decided. We ask them question about it. And then we have 50 headlines after that. These people that were in the meeting. Amazon meets, they report earnings, the CEO speaks, the CFO speaks, and that's it. You don't have directors coming out and saying, yeah, I know, Bezos says so-and-so, but now let me tell you my opinion. Just shut up. We don't need to know what the hell you're thinking daily. Just shut up. Let your boss speak for you. Tell us what you decided and just disappear. So they don't do that.
Could just be too late, and we just need that flush. We just need a flush.
We have had a flush. We've had several flushes. If you leave, but you say we need a flush. If we don't hold this, the flush is 1100 SPX points. Are you ready for that flush? It comes in a week. This is a weekly chart. If we lose this bottom, we're going down 1100 points. I'm not making this stuff up. These are technicals. So I don't think it should go there. I think there's plenty of support along the way. I just gave you one, the target on the Qs. But you can't afford to have a flush these days because what gets started, they will not be able to stop it. I think there will be a rip-roaring rally where everybody will load up in calls, and then the market makers will say, boom, another correction on headlines. We'll come back and retest the floor. Do that a couple of times, and eventually we will break out of 4,300, whatever that failure is. We'll make a new high. If not the end of the year, by January or February. Yes, nobody looks up. Everybody's looking down. Well, I will start looking down permanently when Amazon tells me, holy fudge, we just lost 30% of our sales. If they don't say that, the P&Ls are going to still come out strong, stronger than anticipated. And then people will see, wait a minute, where is this bad data coming from? Amazon, Tesla, Google, Apple, they're all still reporting decent P&Ls. That's fact. Until that fact changes, my opinion says, turn off the news, stocks rally. Turn off the news. Don't tell anybody about the Fed reports, stocks rally. Because they're going to look at the P&Ls and say, fact, P&L getting better or not worse. Therefore, I don't have a reason to sell. Therefore, propensity is to meander up. That's my opinion. But right now, we are hostage to headlines.
Right. The other thing there is that it doesn't really matter what happens in the market. There's always ways with options that you can.
We have a blast. We have a blast trading the price action. I don't need it to rally. I don't need it to fall. In fact, the way I trade, I just need nothing to happen. That's it. So for example, I can take a trade in Tesla right now that leaves room for a 40% drop and not even check the chart one time from now until the end of the year. I can do the same with Google, Apple, Amazon, Facebook, PayPal, Square, all of those. I'm confident that if I buy them here a little bit or lower, I will have a decent chance at making money with those entries. There are some stocks, like I'm holding Palantir long. I bought it at 9. I sold a put at 8, a put spread. So I have a quarter position in shares at 9. I have a quarter position in sold put at 8 with defense at 7. And if they had assigned me when it was under 8, I would have made money. But they didn't assign me. So I'm still long Palantir, about a quarter of what I want. And if my puts expire worthless in my favor, I would sell another set, and I would sell another set, and I would sell another set until I get put half a position in Palantir. When I see stabilization, I'll add another quarter. And when I see a breakout, I'll get in with the full quarter if I have the opportunity. That's what I would do with Palantir. Forget what the market is going to do. I know what the math is on Palantir. I'm leaving room to double down at 5. If it doesn't go to 5, I'm already long half position. So be it. What's my downside on what, Charles? Is this my Charles from the group? If it is, you don't know that number yet? You'll have it on Sunday. Today's Sunday. You'll have it tonight. You'll have it tonight.
Right. And God Pantheon, first-time viewer on the YouTube side, says, wow, this makes so much sense. So easy to understand. Thank you. That's Nick. He's straight up, no sugarcoating, right? And that's easier.
Nick 2.0. Namaste. Doesn't get upset. On Friday, Nick's patience got tested a little bit. Monday, he's aware of that. He's back to tolerance. So here's the thing. The group is awesome. We do good work. We work together well. We don't have, like, there's no antagonism. Like, we do have differences of opinion. Like, I think one thing, somebody else thinks the other. They're probably both right at different time frames. I'm saying I'm the extreme of don't listen to any news. Other people say, no, you should listen to a little bit of news. Use what works best for you. My concern is not to use emotions to trade. So if you can watch the news and not act on it, but act on the intelligence behind the news so you can trade as well. But most people watch the news and they are emotionally, they respond with emotion. They respond with emotions, and then that's when we are liable to make mistakes. That's why I say avoid the news. Not because the news is evil, because the news is designed to elicit shock and awe. For example, you won't watch a show that says, we have the news coming up in half hour, not much going on. Nobody would watch that news show, right? Nobody would stick around to watch it. But if they say the news is coming on in half hour and you won't believe what they have to say about the TLT, then you're glued. Oh my God, what's going on with the TLT? Maybe I missed something. Then you're glued to watch, and then you watch it and emotions come out. So I think we would do better if we don't listen to the news. I think everything is tradable from the charts and a little bit of knowledge. Like, if I understand Amazon inside and out, and I know about their issues, and I listen to the P&Ls and the company statements, I'm less likely to react to somebody's opinion that Amazon is a downgrade. If I'm reacting to an Amazon downgrade from a so-called analyst, I am making a major mistake. In fact, go against those and you will probably win more than you'll lose. So if somebody downgrades a good stock because their opinion or their price target got reduced from 600 to 400 and the stock is 300 and you're selling it, wait, 400, it's 300 now. You got 100 more upside. Does it matter that they downgraded it? No. So don't listen to the stuff. Some news is important, like a game-changing news. Peloton, if Peloton comes out of news, that's not real, by the way. If Peloton comes out of news, they can no longer sell hardware because of punishment. That is a news headline you need to know because it actually changes the P&L. If Amazon comes out and says, I'm entering the heart monitoring system industry or something, that's a new source of income for Amazon. That's reason to expect upside, and that news may carry some upside, sustainable upside pressure in the stock. So game-changing headlines do matter, but they're few and far between. That's why ignoring the news most times is important. Like the minute Powell says he is going to get his foot off the brake, that is game-changing headline. It will actually change the amount of money circulating in the economy eventually. So I need to pay attention. It has sustainable effect. But if somebody says, oh, now I see 6 versus 5, that's not game-changing headline.
Right. Really quick here. Couple shout outs here. We have Trey in the YouTube chat. I'm in the room every day. There's a great energy there. Friday was a lot of fun. I've learned a lot from Nick.
Who
Good
is
stuff.
that?
That's Trey. That's Trey. Really quick though, I want to give a shout out. George Garcia 21 and JD Weld. Welcome to the family.
JD Weld, really? The glue people? JB Weld. Okay. So somebody's asking about Oxy. Welcome to the family. Expect a video tonight. You already have a video waiting in the chat room. Log in and you can get it. 3 videos. Another video tonight will give you the overview for the week. That'll be tonight. Like, I'm in California. I usually do it around 6 o'clock my time, so it might be late, 9. Maybe you watch it in the morning. Tomorrow morning, you have a pre-open note from me. Also gives you the idea, a little update in the morning. And then hop into the live room if you can join us, and the chat room if you can't and you still want to be in touch.
Yeah, I'd say maybe like a quick walkthrough, right, of the chat room of what all these people should do tomorrow morning.
Tonight, if you're joining tonight, go in and watch these videos. Look at the spreadsheet that comes with the videos. And the videos will give you, they're alphabetical. Go down the list and see which one you like, and go to that video and watch about the time where it is. You can fast forward through them to get an idea about your charts. And then also tonight, you will get another video that we'll post also in the same place in the Inner Circle chat that will tell you what I expect for the week. And so that's 4 videos tonight. Tomorrow morning, you will have a write-up with 5 charts for the S&P, 2 for S&P futures, NASDAQ futures, the SPY, IWM, and the QQQ, and a blurb. And probably warning you about the PPI first, CPI, and Fed minutes second, and a whole bunch of Fed heads talking. There's one more thing. Oh, earnings towards the end of the week. So that's what I would do. And say hello. Get in touch with me in DMs if you want, and say, I'm new. That's how I trade. Look out for me. You pop into the live room tomorrow, then I have you in my mind. So whenever I say something, I say, for all you new people, especially so-and-so, here's what you make of this statement. And if you see something that you don't understand, ask a million questions. I don't usually let questions go unanswered. And if I miss your question here because it's scrolled off, because these guys are getting more active, you can see that's without me, reach out to me in private so I can make sure to see your comment. So that's how I would start my day as a member. What I wouldn't do is go in guns blazing with live trades. Did you know that the weekly candles were green last week? What? We had green candles. Look out for the small caps, the IWM and the RUT. That's where all those, anything that looks like ARK Invest that was been. So have you heard the term follow a rabbit in racing? It's a racing term. When you have somebody that's a little bit faster than you, but slow enough that you can keep up with them, you can drive behind them to learn their line and drive as fast as they go. I think the IWM is our rabbit. They crashed first and they fell hardest, ARK Invest type of stocks, basically Bitcoin. And I think they will bounce first. So every day I'm checking Bitcoin 2-3 times a day. I think how goes Bitcoin goes the rest. So be careful, paying too much attention at the giga caps and then not noticing the mega cap, the small caps stabilizing. And that includes Roku, Shopify, Square, not so small caps. I'm not talking micro caps. I'm talking $5 billion to $15-20 billion companies. Twilio, I don't know what's their market cap. Companies like that, keep your eye on Twilio. For body language, like they tell me this is somebody said this is what is that? Shooting star. Is it? I thought it was shooting star when it's up here. I'm not an expert on candles, but this is like an inverted hammer of sorts. So in a downside trend, this could be, if we close above eight, what is this? SPY. If we close above above the high of last week, I think this is the start of a trend to get us up to here and then challenge ourselves in front of. So it's not going to be easy crossing all these moving averages. There's one here, there's one everywhere, but pick a moving average and there'll be a seller waiting right there. But first step this week, if we can close above the high of last week, that would be an outstanding start. I'm not a candle expert, but you should go educate yourself on what does this candle mean. Somebody said it's a shooting star. I challenge that. I'm not a candle expert. Shooting stars are like this. This is an inverted hammer at the end of a swing after a big drop. I think they're more likely to be a bounce, not necessarily the start of a huge rally, but a bounce into moving averages. And we have several. I think there'll be sellers lying at 385 and higher. There was a number that was a huge dark pool number. I think it was 385.67 or something like that. Anybody from my room here, can they remember that? Falling star, is that what that is? Okay, Ryan. Is this the Ryan, my Ryan? Sounds like it. So what is that interpretation? Is that bullish or bearish? This is what happens, by the way. If somebody knows more about candles than I do, I will ask them and you will have 3 or 4 different answers. Oh, new Ryan. Never mind then. Bullish. Charles says bullish. So if 2 or 3 people say bullish, I will go out and research it and we'll give it a name and we'll go with that. So, and by the way, we did come up with a couple of trades. One was the Bartsky. What was the last one? Anybody in the room? It was beautiful. I wrote it. It's here somewhere. I took notes. That can be bullish. Yeah, Jose. That's why I'm saying it can be bullish. If we close above the high of last week, I think my interpretation would be bullish because this is an avid seller right there. This is a very avid seller. If we can close above that avid seller, we shut him down. Right? Confirmation. You and I are on the same page, Jose. So I'm not an expert in candles, but I am an expert at reading charts and not making obvious mistakes. So
you're also looking at the futures as well. You do also report your charts and levels with futures, right?
Absolutely. I'm watching the futures. Somebody says, why do you watch the futures all the time and not the SPY? That's because I get a continuous look at it. They haven't opened yet. They'll open 3 o'clock my time, so 6 o'clock p.m. So the futures tell you a lot. It's as continuous as price action as you can get. So sometimes you see a bottom in the SPY when it's actually not the real bottom. There'll be a lower low still in the futures contracts or a higher high. You didn't answer my question about Oxy. Okay, I'm probably sure I didn't answer a lot of other questions on Oxy. The Oxy answer is I told you I'm short oil for the same reason. If you ask me what to do with Oxy right here, I would fade it. Oxy's danger is you have the looming headline of Buffett buying it. If you're buying Oxy shares to make money on the shares, thinking you're following Buffett, you're making a mistake. Buffett doesn't want to make money off the share price. He wants to make money off of its cash flow. He wants to own the company. That is not the same thing. So I'm confidently saying those who bought Oxy at the highs are stuck there for years without a buyout. And I am more confident of that statement in Exxon and Chevron. Buying Exxon, Chevron, Oxy oil at these levels, it is not an easy rally from here. You're more likely buying a top than a great entry point. For that reason alone, I would opt out of chasing Oxy up here. I don't understand this obsession. I really don't. I don't want people to lose money, but I almost want the debacle just to prove everybody wrong as to blindly following somebody. I'm pretty sure Buffett knows what he's doing. He doesn't need my permission, but he's not trying to eke out a profit buying Oxy at 69 to sell it at 76. He's trying to own the company. He wants the cash flow of the company. That's how he makes his bread and butter. He owns businesses that have a sustainable advantage and a cash cow. You know that 4 quadrants of business, whatever they're called, I forgot what it's called. You want to end up having a cash cow that feeds other things. Well, he wants to own nothing but cash cows. So This is not a cash cow. Yesterday, I sparred with a guy who confirmed, because I sparred with him about 3 months ago. He works for Oxy. He's a independent contractor, and he is a crane operator or something. I haven't seen him in a long time. Where have you been? Oh man, we've been busier than ever. The company is making more money than ever, but production is down 30%. So the only reason why they're making more money than ever is because of the extreme high price of their commodity they're dealing with. And if that extreme high price goes away, and if you heard me earlier, I think that high price of oil is transitory. It has special circumstances why it's this high. And when the tide pull back, there's going to be a lot of carnage in that industry. I don't want to be anywhere near it. Buying a stock, whatever this is, up here, when it's failed twice before, is ridiculously silly. Technically speaking, if you know the fundamentals and you know what's going to make it go to 84, by all means, you don't need my opinion. Why are you asking? If you ask me based on charts, this is not a good start. This is not an obvious point of entry. How about that? Nope, not obvious point of entry. Nope. So not for me. This is Oxy long term. How many months do you want proof that this is not a good start? Let's see. 1, 2, 3, 4, 5, 6 months. 3 months. 1, 2, 3, 4, 5, 6, 7, 8. What, 10 months? What's another? 6 months? 1, 2, 3, 4, 5 months and counting. How many months of failure do you need proof that this up here is not a good start for Oxy? This is a monthly chart. Monthly chart. I can't see capital letters, so I don't understand that. All right. Did we do enough here?
Yeah, we've been here for quite some time now. We've been here for about 2 hours. We were only supposed to be here for 1 hour, everybody, just so you know.
I'm exhausted, friend, and my day still has not started.
Right, there's definitely a lot more to go over. Well, that you have to go over there with the members in the chat. So there's several people here, Nick, that recently joined and already members. Before we do kind of move on here, well, I move on here to giving them a live walkthrough of the room for all those that joined, so they know what to look for. Do you have any closing remarks on the markets, and what should the members be looking at tomorrow in the morning once you get back into trading?
Look for ranges and levels that make sense to you. Don't follow opinions, don't follow emotions, don't follow big red ticks and big green ticks. So what I say shorter term, if you're actively trading, trade levels, not ticks. So you see big green ticks like this, you get the urge to chase it. We're humans, we're designed to chase, and then you get caught. And then it chases again, and then you get caught, and then you chase again. Look at it. Look how mechanical that was on Friday in Oxy, right? So if you chase too late, you end up getting stopped out. Or if you short on big red candles, you get locked. You short on red candles, you get locked. Conversely, with the SPY, you see big green ticks and you chase it. Oh, I want to go long. And then, so Monday, this is a pretty important level to hold, 357 and change. Bounce off of it. I would assume a bounce off. And if it fails, I'm out for a trade. And then I'm looking at 352 from memory. I would zoom out to confirm that. If we get to 368, I expect sellers. If they pass it, they get to 374 to 376, I expect sellers. When those sellers show up, so if we get here, I expect sellers. Let's say the buyers put their foot in it. We get to here, I expect sellers. And if the buyers keep their foot in it, if we get here, I expect sellers. If we take this out, now we have a breakout. Or lose, can't hold here, we bounce, lose, So just trade it one tick at a time, one level at a time. I just gave you the first level, 369, 370. Second level, 375.6. below, hold this, or 352 is probably in a jiffy, if not 348. That's it. This is the pragmatic approach to no emotions, just lines. And if we gap up, don't get long into this. Wait for the dip to fill the gap, hopefully, to come back and test it. If we gap down, don't buy calls in the rip because they're just trying to recover. Buy puts on the rip and then fade it back down. This is the active trade. The market is not closed on Monday. All right, that's it for me. I got to go. I got homework. I got emails. I'm falling behind.
All right, folks. So I'm going to show you the live room here really quick. Nick, thanks a lot for being here, man. Big shout out. I'll see you in the chat room tomorrow.
Thank you for those of you who are in the chat already to take time of your day to be here, even in more chats. That is insane. That's testament to everybody here thinking about the chat, that these people don't have to be here. I don't advertise it. I've never once asked them to be here. In fact, I said, this is not for you. And there they are. They're here trying to support this service. It's just unbelievable. I appreciate you.
All right, Nick, I'll see you tomorrow in the chat room, man.
Later, bye.
All right, folks. And that was Nick Shaheen. He's lead trader mentor at the Options Live Trading Room. For those you guys that join here, okay, I'm going to give you a quick walkthrough so that you can more or less get a sense of what you need to look for, right? So this is the live room. This is the blue static open 24/7 room. There's two channels. The inner circle chat, that's where everybody's posting, right? Including Nick, two-way conversation. The other place that you can post is on Nick's important messages. In this room is where basically only Nick can post, and you can find all of his trades. This is the video from Sunday. You can see it's split in three. Then the Sunday session, remember, it's made from your tickers, right? So when you guys pretty much put a ticker here on this form, as you can see, that ticker will go into the list and Nick will review it, right? So this is the Sunday session. You can join live 10 a.m. Eastern, right? So this is the Sunday session that is just for the chat members. The session that you're looking at right now is not part of that. Today, this was just a little bonus thing here that I did with Nick today to kind of talk about the markets, but that session here for the members is private. It's not like on YouTube or anything like that. You have other trades here Nick was talking about right here. So you will get trade ideas, you will get setups, charts. Now, very important, as soon as you get into the session on Monday to Friday, pretty much, this is the link that you need to click for the session. It's a new link every day. So this link right here basically takes you to the live session, which is from like right here. Let's see when that's posted. So this was at 5 a.m. So like 8 a.m. So this is 8 a.m. Eastern, right? And you just click there, and that's where Nick is going to be sharing his charts, webinar style, basically, right? So you get a lot of information here, a lot of content, all from Nick, trades, that sort of stuff, market commentaries, charts, technical, everything, right? In the inner circle chat, everybody there is posting, okay? That's where everybody, you can ask questions, all that stuff. In the live session, you can do that as well. So, so yes, anybody that basically joined today will get bonus trade alerts and strategies from Nick. Those are going to be sent to you separately. They're separate from the live room. Basically, you'll get free access to that, right? The other thing is that the laptop, make sure that you fill out the form after you sign up. There's an automated email that goes out to you once you sign up, and basically you just have to make sure to put the address in that form that you want the laptop to be shipped to, right? So we covered the laptop, the live session, the chat room, the channels, the bonus trades and strategies. If anybody does have other questions, we'll put the contact in the chat. Make sure you're using that link. Even if you want a lifetime, reach out. We put the number and email there for you guys. So big shout out. Thanks a lot for everybody for being here, and for all the members as well for putting time out of their Sunday for, you know, all the stuff we do here with Nick. We'll see you guys in the chat room tomorrow. Have a great day and happy trading.